What's up everybody? Welcome to the Stocks channel. My name is Cory and today in the stock market we bounced right back up to resistance as we're going into the midterm elections. Are the bears going to continue to push the market lower? First up, let's take a look at the S&P500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we were up 0.96% and you can see SPY did break back over that resistance at 378. But currently finding resistance at this very flat looking 50 EMA. Now going back to look at how we got here is we did hit the critical level where the bear lives at SPY 390, which while we are below SPY 390, we are very well within the bear market, and the bulls need to prove we are ending the bear market by getting SPY above that level, which obviously the bulls failed to do. We saw high volume selling from that resistance. We got back down towards the 20 simple moving average, and right now we're seeing a short-term bounce right back up into resistance. So in the grand scheme of a bear market structure, this would be the perfect area to continue another leg lower right from this resistance after getting the next lower high before the next lower low, which would be a retest of this level down here right around 358. Obviously, if we break down and we continue lower, we could make a brand new 52-week low with that price target down there right around 342, and of course possibly even lower while we're in this bear market. Now the only way we will be getting bullish on this market if the bulls can break all the way back above SPY 390, show that is a real breakout by allowing that level to become support and then continuing to push higher towards the 400s. Then we could possibly see an end of year market rally, which could take us back up to 408 to about 410 before we find any more resistance from the bears. But right now this bear is comfortably seated at SPY 390 until the bulls dethrone him. So that is going to remain the critical risk level on this market, that while we are below SPY 390, you could just stay short on the market assuming lower prices because the bulls have not yet proved otherwise. Now if you're looking for a closer risk level to the current price, that's going to be right around 380 to 382 because that is the level the bears might want to defend to prevent the bulls from pushing back towards 390 and getting another shot at defeating the big bad bear. Now if you want to wait for confirmation, wait for a rejection from some of this resistance and then a break back down below 378. And that should start us well on our way back down towards retesting the closing low right around 370. And then of course that opens the door to pushing even lower. So remember, I continue to tell you this is a bear market until it's not, which means the bulls have everything to prove because the bears still have the advantage of the price action and the trend because we are still in a bear market. If you're getting bullish at these levels, make sure you're managing risk very tightly right here at this level right around 378. On the Nasdaq 100 triple Qs, we are up 1.1% today, and again the triple Qs had a very similar story that I just went over with SPY, with that high volume rejection from the critical resistance back down towards the support zone at the previous closing low right around 260, and right now we are getting this sort of double bottom bounce off of this support, but it's not going to be a confirmed double bottom unless the bulls can break all the way back over the neckline. So as I continue to tell you, make the bulls prove everything. Right now, this could be a very simple rejection for the bears to show up right here at this resistance right around 267 or possibly the 20 simple moving average just below 271 and then continue to drive prices lower. So this is still a downtrend while the triple Qs are below 282 and this resistance trend line, which is going to be right around 276 to 277. Any of this resistance below the bears can show up at and continue to push price action lower. So keep that in mind that if you're starting to get bullish, you need to be very cautious because you are still in a downtrend and you can clearly see all of these moving averages are stacked to the bear side. So on the triple Qs, we need the bulls to prove it by breaking back over 277 and then getting above this resistance zone between 282 and then 284. And even then, the bulls still have to push all the way through 293, which is where the big bad bear in the triple Qs is waiting. So this is obviously a very heavy tech sector that is driving prices lower, and as you can tell, we are already at the 52-week lows, testing them just a few days ago. So continuing to respect the downtrend, and do remember there's more than likely a lower high, lower low situation coming as long as we're in this downtrend. On the Dow Jones DIA ETF, we were up 1.32% today, and the Dow Jones is getting another very strong bounce from this support zone at 319, breaking back over the 200 simple moving average today, and coming right into this resistance from the previous daily closing high, which is 329. Now, if you look at the Dow Jones, it's a very different story than the triple Qs because it's one day away from having the full bull trend with the price action back over the 200 simple moving average. So as you can tell, the Dow Jones is no longer looking like it's still in a bear market. Now that can change very quickly if we see a high volume rejection from this resistance around 329 or the resistance trend line at 333. We could still come all the way back down and still fill the gap at 311 or the gap much lower at 285. But obviously the short-term trend is still an uptrend, especially while we're above a rising 50 moving average, especially with the 20 simple moving average rising as well. So do remember, this is an uptrend in the Dow Jones until we see high volume rejection and then losing the bull trend by breaking below some of this support below. So on the Dow Jones, look for a potential rejection from 330 and then 333. And if we do get the breakout, we'll very likely quickly fill that gap at 336. On the Russell 2000 IWM ETF, we were up 0.45% today, and the small caps are holding this support zone breakout at 176, which is the double bottom breakout of the neckline. So there is still a valid double bottom price target up here at the gap fill at 188, as long as IWM is trading above 176. Now you can tell there has been a great opportunity to go long at that neckline using that level as your risk level, and we are still relatively close to that level. So the bulls may continue trying to push to hold this support zone at 176 for the hopes of filling that gap at 188, but you instantly need to get bearish if this support level breaks at 176, because we could be going down for that next leg lower. So critical support in IWM remains 176 with a valid upside price target at 188 as long as we're above that breakout. Also look for strong resistance right around 183 and 186. On the ARKK ETF, we were down 0.65% today, so you can see ARK is still struggling on a day the rest of the indices were going higher. Profitless growth companies are still going lower. There's obviously a lot of Tesla in this ETF, and that was down big as well, so do look for a retest of this low right around 33.7. And if that level does break down, we're very likely going to start trending down towards 30. The resistance level to break is getting back over the 20 simple moving average at 36.5 and then breaking the daily high at 39. On the VIX, we were down 0.9% today, and the VIX is continuing to head lower with many red candles in a row, and we're right next to this support zone on the VIX at 24, which is very likely where the VIX is going to try to bounce from. So we could see a short-term pullback in the indices as we get a spike in the VIX. But if we see the VIX crushing down below 24, that is going to allow the bulls to continue to push higher as fear is leaving this market. We still do have a volatile market while the VIX is above 20, but do watch that support zone right around 24. On Bitcoin, we're currently down 0.53%, and as you can tell, Bitcoin is currently making higher lows and higher highs in the short term on the daily chart as we continue to march higher towards that price target just above 22,000. We need to hold this rising support trend line with strong support right around 20,300. And as you can tell, the moving averages are stacked up back in the bulls' favor. If at any point we lose this support around 20,000, the bulls could slip and fall, and we could see a quick trip all the way back down to 19,000. But so far, the bulls are doing everything they need to do, pushing towards that price target at 22,000. On Amazon stock, we were down 0.49% today, and we could see Amazon did reach our price target at 88, and we did see a short-term bounce. But overall, we are still in a very strong bear trend as we could be retesting that target in the very near future. The high volume selling is starting to die off as we see volume drying up, which is going to favor the bulls in the short term for a bounce back towards 102, and we do have a gap to fill right around 110. So use that critical resistance as 102 to stay bearish while we're below that level, but on a break above that, things will be looking more bullish in the short term for a counter trend rally towards resistance. On a break below 88, watch out below because this is very likely going to start looking like capitulation if we continue any lower. On Microsoft stock, we were up 2.93% today, and we can see Microsoft looks like it was the first to bottom because we're starting to see a very nice bounce off of this level right around 215. And if we do break above the resistance at 233, we'll very likely make a run back up towards 242. Above 242, Microsoft will be looking a lot more bullish, but we'll still need to break above that critical risk level at 252. This is clearly still a downtrend of lower highs and lower lows, so look for that very strong resistance coming up right around 232. To the downside, look for support at 225, 219, and that previous closing low right around 214. On Nvidia stock, we were up 1.02% today as Nvidia closed that one gap that we had right around 142 and continuing to march higher towards resistance at 145. And if we break the resistance at 145, we do have a gap to fill right around 150. Now remember, even with this counter trend rally, Nvidia is still in a downtrend because our 200 simple moving average is still much higher with a negative slope. So don't be getting overly bullish as we approach resistance. Make sure you're managing a risk if you're staying long, with the risk level being right down here at this breakout level between 134 and 135. If we lose that support, we could come all the way back down to the 20 simple moving average, which is going to be right around 130. And below that, you're looking for a retest of the low at 122. On Tesla stock, we were down 5.01% today, and Tesla is doing exactly what we expected, which is eventually breaking this low to get to our price target at 186.5. Remember, this is a retail favorite, and we still have not yet seen capitulation in this stock, so it does not guarantee that we are going to bounce off of this next price target. We could continue to see high volume selling and flush right through it. So do respect the fact that Tesla is in a strong downtrend. These are very high volume rejection candles and nothing you want to ignore, even though in the short term we are getting oversold below that lower Bollinger Band. That doesn't guarantee anything, and that doesn't guarantee we need to see a bounce. However, there is obviously always going to be the chance of a dead cat bounce, so you will want to look for that strong resistance right around 205 to 209. And as long as we're below those levels, you do want to be expecting lower prices like that price target at 186.5. Now, if we do get a bull breakout, that's going to be the break back over this resistance trend line right around 222, and then that strong resistance, which is still up there at 230. On Apple stock, we were up 0.39% today, with Apple continuing to head lower ever since we got rejected from that negatively sloping 200 simple moving average with the valid downside price target at the gap fill at 133 or a retest of the low at 130. You can see we also do have a gap to fill to the upside at 145, but we do have a bear trend, so we're more than likely going to fill the down gaps before we fill the up gaps. If we do continue to bounce off of this support right around 136, look for upside resistance around 142 and that gap fill at 145. On the financial sector, we were up 1% today, and you can see the financial sector close the gap above, but finding resistance right around this 200 simple moving average and strong resistance zone just below 35. If we continue to push higher and break above the 200 simple moving average, that's obviously going to be very bullish. The industrials are up 1.07% today, breaking out to another daily high with that second day in a row back over the 200 moving average. The healthcare sector was up 1.07%, pushing back up towards that resistance at 135 as we are starting to develop a bull trend. The energy sector was up 1.72% today, breaking out to another 52-week closing high, and we're getting very close to pushing towards new 52-week highs if we can hold above this support breakout at $92. So jumping back over to the S&P 500, you need to remember that we are still in a bear market and we are still in a very strong downtrend, and the last thing we saw happen was a high volume rejection from the critical risk level that the bear is living at, which does define this bear market. So don't get overly bullish on a bounce, because remember, a downtrend consists of lower highs and lower lows, and for all we know, this is the next lower high before the next lower low. So have realistic expectations, and if you understand you're in a downtrend, you're not going to get emotional by seeing lower lows after lower highs, because that is going to be your expectation. Remember, it's a downtrend until it's not, and it's a bear market until it's not, which means the bulls have everything to prove, and there is no reason to get FOMO while we're in a downtrend. This is very likely going to be a very volatile November, and I do believe it's going to be very choppy, so it's going to be great for trading as long as you understand your risk and you're not swing trading for long periods of time. Also, don't forget I have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETFs TQQQ and SQQQ, and sends you all of your buy and sell alerts directly via email and text message. You can learn more about Bank or learn how to subscribe by clicking on the link in the description of this video. If you're looking to become a better price action trader, consider joining the Stocks Channel Trading Discord community, where you get access to all of my intraday updates and analysis. You can find out how to join the Stocks Channel Discord by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.